Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Equities here at Simpler Trading with your weekly Edge show for Saturday, January 14th. Today, I am going to go ahead and share with you my views on the broader markets. You want to make sure that that backdrop as it relates to the markets, is it safe to jump in? Or should caution still be warranted? We'll get into that. And then also what is really driving these markets as we progress through this show. I will share with you the drivers and then those areas that are benefiting, as well as areas that are continuing to weaken due to those drivers. And then viewer question of the week. When will I know if my stock's downtrend is over? An awful lot of stocks are trending downward, unfortunately, but I will share with you a really good example of the key characteristics that will help you determine that your stock has reversed its downtrend and is poised to trade higher. So from here, I'm going to share with you some of the more impactful news that was released this week. First up, Fed Chair Powell did have comments to the Senate Banking Committee earlier in the week that really helped calm nerves, if you will. He talked about not raising interest rates too swiftly, and then also the fact that he feels we will have a soft landing as it relates to the economic recovery. That was enough to get growth stocks going early into the week, but unfortunately, as the week progressed, growth stocks did deteriorate. We saw consumer price index on Wednesday gain 7% for December, bringing inflation up to a level not seen since the 1980s. So inflation continues to be an issue, and the markets did not like that news. Oil prices are continuing to climb. As we talk further, I will share with you the dynamics as to why and what areas you can take a look at to participate. Interest rates pulled back, certainly compared to last week's spike. They closed flat. So these are two areas that are driving the markets, and we will get more into that as we move on here. Producer price index modestly rose, not a whole lot of news there, but we did see on Friday retail sales fell 1.9% in December, and subsequently consumer sentiment for January fell to a 10-year low. And a lot of this is inflation related. Prices are increasing, and also Omicron fears as well. So we did end the week on a down note. Retail stocks did get hit, but again, we'll get into all of this and more as we move on. So where exactly did the markets close, and where do we stand going into next week? Let's take a quick look. Here is a daily price chart of the S&P 500, and I like to overlay these simple moving averages. This green is your 10-day, 21-day here, and the red is your 50-day simple moving average. And that 50-day generally is an area that you do want the markets to be finding support at in order to provide the backdrop that the broader markets could in fact trade higher. So as we go back to these pullbacks in May, June into July, we can see each of these periods we did find support at that 50-day, and the resumption of that uptrend took place fairly swiftly. As we moved closer toward year-end last year, inflation becoming more of an issue, we did have a lengthier pullback here in September into October, and then again in this December period, a lot in the way of volatility. Take a look at the bumpiness. Certainly last week I talked about an early week rally. A lot of that was given up. The broader markets did close the week generally flat. However, of most importance here is it is below this 50-day simple moving average. We can take a look at the outside momentum indicators, your RSI, negative below 50, trending lower, and then also stochastics below 50 and trending lower as well. So overall, cautious stance on the broader markets. I would not put a lot of money to work. From here, let's take a look at the NASDAQ. And of course, this is a very growth-oriented index, a lot of high growth names, the FANG stocks in here. And we can see a lot more in the way of deterioration. The NASDAQ was able to close the week just at this 200-day simple moving average, which is the current area of support. We can see that your outside momentum indicators are negative and trending lower. So the NASDAQ is not healthy at all. So in high growth, certainly you want to navigate very, very selectively and carefully. From here, let's go ahead and take a look at some of the underlying sectors and the 11 underlying sectors in the S&P 500. I've gone ahead. This is a 2-month daily price chart. I've added an RSI. That's a relative strength indicator. And then descending order. We want to see where that relative outperformance is, certainly relative to the weaker areas. So up here in the forefront, I talked about oil prices continuing to rise, had a profound impact on the energy sector. It was the only sector up for the week, and it gained over 5%, a very confirmed uptrend here. We did see a reversal of this downtrend in the beginning of January 3rd to be precise. My MEM Edge subscribers will know I sent out an alert report indicating that energy was bullish, and we began adding a couple of stocks. Now from here, I will add an extra simple moving average just to get a feel for where we currently are. So this 5-day moving average, once this energy sector gets going, it can be really helpful as far as gauging whether this uptrend is still in place. The RSI, we can see it's up here above 70, overbought. However, we can remain overbought for some time. It's not the end of the world. However, once you begin to see with energy, and this is true for stocks as well, this MACD crossover, black line down through the red, that will tell you that that upside momentum has in fact shifted. At this point in time, the uptrend still is very much in place, and we are not close to that MACD momentum shift that we saw back here in November. So let's take a look at some of these other sectors here. Up here in the forefront, consumer staples. Now, staple stocks were mostly flat for the week. They are holding in, but a lot of higher interest rate names in here that are attractive, but also these staples stocks, whether it's food related or otherwise, they do have the ability to raise prices during periods of inflation. And in turn, a number of these companies are seeing actually increased revenues despite the inflation. So that's a strong area. We can also take a look at financials, and I mentioned interest rates. Into our next segment, I'll share with you the yields and where they headed this past week. But financials up here in a confirmed uptrend. We did see a pullback today. Fourth quarter earnings season has started, and it always begins with bank stocks. A number of these larger bank stocks actually came in below estimates, so hence the drop here. However, there is an area within banking that is faring much better, and I'll share that right here, actually in our next segment. So coming up, we also want to make sure you're aware of some of these weaker areas in the markets, and healthcare continues to stumble here. We are below key support, your outside momentum indicators in negative territory, with a number of high growth medical products stocks that are continuing under distribution as growth stocks suffer, and then vaccine related stocks continue to get hit. So also in this weaker area, I mentioned to you that retail sales faltered and also consumer sentiment declined, really hitting the retail space, and in fact, the consumer discretionary sector was down almost 2%, one of the weakest performers for the week. So also we can see the outside momentum indicators are negative, indicating that this particular area of the markets is not in an uptrend. From here, we can drill down beyond the sectors, and we want to take a look at some of these sub-industry groups that can really help you fully embrace where the markets stand at this time. Again, that relative strength indicator and this 2-month daily price view. And take a look, the strongest area is banking. However, this is the regional banking ETF. KRE is the ticker symbol. A lot of these smaller regional banks remain in confirmed. Oftentimes, these banks will get higher profit margins on their lending activity as rates rise. So up here also is that yield that I talked about on the 10-year Treasury. And we can see this is last week's spike that we did occur. And then this week, interest rates pulled back, ended the week mostly flat, but certainly still at an elevated level. 1.77 on that 10-year puts it at a multi-year high for yields. And then from there, we can see the impact on other areas, such as energy, that fares well during higher interest rates, and bank stocks as well. I mentioned to you rising oil prices. Brent crude closed the week at $84 per barrel. A lot of this is the weaker dollar, also supply demand impacting this oil pricing, which in turn is helping those energy stocks trade higher. Also, we want to make sure you're aware of some of these weaker areas. I've been talking about this for some time now as software stocks continue to deteriorate. And this area is susceptible to dropping when interest rates rise, but certainly not to this extent that we've seen. Also, the high growth prospects of these software stocks. As inflation is elevated, there's value of that future growth is diminished. So this area is continuing to be in a downtrend. Semiconductor stocks, a bit mixed. We did have a bellwether semiconductor company report very strong earnings, Taiwan Semi. So there are a handful of names that are doing well. Two of them are on my MEM Edge report, but it's very selective. Overall, software stocks are struggling with the broader markets quite a bit in the way of volatility. We did close the week above this 50, but generally your trend is overall to the downside for this particular sub-industry grouping. So from here, I did mention that viewer question of the week, and it's going to be all about how you can tell when your stock or a stock has reversed its downtrend. And this is not only going to be helpful for stocks that you might own, but also as the markets potentially firm up into the latter part of this first quarter, you are going to want to know what to be on the lookout for, as there are a number of stocks that are really down and out. I mentioned and showed you the software space, other areas in healthcare as well. So when you are looking for the signals that the downtrend in your stock has reversed, first up, you want to see that stock break back above each of its simple moving averages. Now, this is HP Inc. HPQ is the ticker symbol. They do sell, manufacture, and distribute laptop and desktop computers. And we can see that the stock peaked near term back here in May and was in a downtrend. It did have several downtrend reversal attempts. However, this period here in mid-October did stick. And I did want to point out to you the difference in this break back above the simple moving averages as it compares to this early August, early September period where we also did break above those moving averages. There are other factors in October that really made it clear that this reversal was real. So here's the signals that I did want to point out to you. First up is the fact that the stock gapped up above the moving averages on news. And then, in fact, the company did come out. They raised their profit outlook for the remainder of 2021 into 2022. Very bullish news there. The company also raised their dividend on that particular day. That indicates strength in the company as far as their fundamental backdrop. So that's one item that was different. Other item that we can point to is this MACD. That's a moving average convergence divergence momentum indicator. If we go back to this August and September period when the stock appeared to be potentially reversing its downtrend and fell, that MACD still was just hovering around that net neutral. You want that MACD to be further up above that net neutral zero in conjunction with a positive RSI. Third factor here is this break above this 200-day here in mid-October occurred on high volume, and that's going to give you conviction that downtrend has reversed. Lastly, I wanted to share with you when these downtrend reversals do fail. The good news is oftentimes it is very swift. This was about 2 days after that potential reversal. It fell again here several days and it fell. So if you want it to get more in the way of confidence or signals, you could wait for a continuation rally and pick the stock up later. But certainly on this reversal on high volume news and a higher MACD should be enough to give you that confidence that your stock is now in a confirmed uptrend. That's it for this week. Everyone have a wonderful long weekend, and I look forward to seeing you next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.